I'm really excited to have some amazing folks from the Capital Choice Financial Services Group here on to talk about ways that families of all educational options, but especially homeschool families, can benefit from planning for the future. And I can't wait to hear all the wisdom they have to share. So why don't I go ahead and let you guys introduce yourselves and tell us a little bit about you and how you got into this field.
Okay. Hi, my name is Jennifer Toussaint. I have been with Capital Choice for about 5 years now, and the reason I joined Capital Choice is because it gives me an opportunity to serve.
Very good. My name is ML Williams Jr., and I got involved in this industry, financial services industry, now over 38 years. It'll be 39 years October of this year. And I got involved because of the fact that I found that there was a organization and people who cared about helping people understand the money game. And the money game is very simple, but in fact, what happens is the industry has turned the money game into something very complex and troubling, which we break it down and we make it simple. So, as Jennifer just said, we serve families by sharing information that they could use, especially middle income families, that they could use to improve their financial situation.
Well, I think homeschool families certainly qualify for the lower end or middle of that scale. So I'm really glad to have you on here.
Thank
Single
you.
single income, we have to watch every penny.
Yes.
So so this is fantastic. Great. Well, thank you guys for all that you're doing to help people. I think that's really a great way to just minister and to be a big part of the community.
Mhm.
Can you tell me a little bit about the families that you serve
Mhm.
and Capital Choice? What how do you serve the families?
Well, from a general standpoint, Angela, Jennifer, my wife, she was looking for a niche to it, like she said, serve. And we understand the sacrifices that homeschool families make in order for them to make a reality, for them to be able to, like you said, live off a single income. But that sacrifice shouldn't turn to a sacrifice such that you can't enjoy life. And that's where the rubber meets the road. Understanding finances in such a way that you're able to protect your family, at the same time, be able to stay out of debt, manage debt in a way that it doesn't bring that pressure. And then thirdly, be able to increase your savings because those the times is coming where you're going to have to think about education further beyond homeschool, and you're also going to be thinking about retirement. So, with all that packaged in, we also offer a part time business opportunity whereby a family can earn additional income, like I did, because I got started part time. From a
Oh,
part time, yeah, I got started part time. When Jennifer found this niche,
Mhm.
it kind of matched my niche. My children, I never wanted them to see it inside of a daycare. So I was working in corporate America after a professional sports career ended because of an injury. And what I found was that, um, you know, I just did not want my kids to be latchkey door kids. So, like I was. So I just decided to start part time. So from a part time basis, I learned the money game, and it's a game that can be simplified and understood such that you can change your trajectory financially and still enjoy homeschooling your children, and
mm,
without the stress of finances bearing down on you.
wow, that's great.
Mhm.
That's great. Out of curiosity, what sport did you play?
A long time ago, I was a professional baseball player.
Oh, cool.
Yes.
What team were you on?
Well, my original team that I was drafted by were the Philadelphia Phillies. Drafted in the 10th round in 1981. Like I said, a long time ago. But my career lasted through the minor leagues, and some opportunity to go to big league camp and spring training for about 6.5 total years.
Mm.
Oh, that's great. What a fun story to tell.
Yes. Thank you.
All right. So I guess back to business. But
Mhm.
what are some of your biggest financial challenges that you help families face today?
Yes.
Mhm. I think some of the biggest financial challenges that we help families with are balance in terms of, we have so many families that need clarity on retirement planning, on college funds, on um, income protection. So what we do is utilizing an educational approach, we're able to provide the clarity that they need just so that they can start working on their financials and be able to get that holistic balance that they're looking for. Anything you want to add?
Yeah, especially in the area of income protection.
Mhm.
Income protection is something that uh, the industry calls life insurance, and we get that part. But at the same time, it's really designed to protect the breadwinner's income. And at the same time, understanding that uh, you should have the maximum coverage for the minimum dollars. And it should not be confusing. And it should not be a major cost in your household. It should be a minimum cost for the maximum dollars that also allows protection for your family, which we call living benefits that are attached to it in such a way that if you have a chronic, critical, or terminal illness, your family's still protected in a
Mhm.
way that you can still have the homeschool process moving through because you're not having to give up on that dream of your children being in that ministry of your children being homeschooled.
Mhm. And Angela, the other challenge that we encounter is trust, because you have to be able to have a relationship
Hmm.
with that family so that they are able to trust you enough to be able to help them. And as Amel mentioned earlier, it's hard to build trust, especially in the world of AI now, where you can use ChatGPT, which I use quite frequently. But at the end of the day, you're not able to build that relationship and be able to build that trust. Because I know I personally find it difficult. And not tell Mel jokes. We joke because I don't hire someone unless they are referred to me by someone else. So our business model is also based on referrals. So being able to build that trust, I think, is also key in helping families um, with some of the financial challenges that they're enduring.
Yeah, that's good. Um, yeah, I trust you're right. I think the world is starving for more
Mhm.
real interaction right
Yeah,
now. And
yeah.
so it is, I think, having that trust with the people that you serve is really important. Thank you.
Mhm. And
Right.
authentic relationships.
That's right.
Mhm.
And I
That's right.
think part of that is keeping it simple,
Mhm.
Mhm.
making so-called complicated things simplistic,
Mhm.
so that
Sure.
you can take advantage of it with that trust. Yeah.
Mhm.
Yeah. So, what are some simple financial concepts that parents should understand then?
Well, uh, the financial life cycle is
Mhm.
something that uh, should be understood and used as a concept to start the beginning of that process of understanding how money works. Because the
Mhm.
financial life cycle is designed where in the early years you should have your family protected in such a way that you have enough money still freed up to save and put away for emergency funds. Just in case something were to happen, you start off with
Yes.
a solid emergency fund. At the same time, you're looking for 529s to be put in place eventually once you get your emergency fund solid. And then you're looking at taking advantage of the Roth IRAs for your family as you look to start for your retirement planning. And then all along that way, you're managing your debt.
Mhm.
So that's the concept that frees up money because debt is a cancer.
Mhm.
It can erode your purchasing power. So as far as investing and saving, I'm saying not buying more things, but purchasing power within your household, and then looking at lifetime savings. All of that sum up into the financial life cycle because eventually your children are going to be grown, they're going to be off to school or they're going to go up into their own careers. They're going to get married. Now you're looking at, well, what about mom and dad? Do we have our resources in place to retire with dignity? And and if you have too little protection, it can destroy the plan. So you need to have the protection in place. Uh, and then from the debt standpoint, I already spoke on that, how debt can just destroy and just eat away at everything and not allow you to save. And then too little savings. We all know Social Security is not going to be there. They're telling everyone that. That's why they're increasing the Roth IRA contributions, because the government knows that there's going to be no excuses down the road. But the message, Angela's not getting out there. Capital
Oh, no.
choice. No, it's really not. It's not getting out there in the way that Capital Choice wants to get
Mm.
it out there, as Jennifer
Mhm.
said, in a holistic approach, so that people don't feel as if they're being talked to or sold to. Through an educational process, folks will feel much more inviting to get the information and make those decisions that are going to benefit their families, both short term and long term.
And we know it works. I mean, because you've talked about you've been
Yeah.
in this business for 38
Yeah.
years. So you have a history, a track of
Yes.
working with clients from the very
Yes.
beginning. And
Yes.
now some of those clients have children and they have
Yes.
grandchildren and
Yes.
they're ready to retire. And just being able, from my perspective, just being able to see some of these clients and just how humbling it is to know that you've been part of that journey.
Yes, yes. We just got off the phone before we started this taping with a client. Daughter needed money out of her 529 plan because she's getting ready to go to med school, and she's pulling more money out. Right? It was
Mhm.
awesome, and we're like congratulating her because she's going to be a cardiologist,
Cardiothoracic surgeon.
cardiothoracic surgeon. Well, I've have a part in that.
Yeah, yeah.
And because we, like Jennifer said, we know it works.
Mhm.
This is
That's
no
right.
pie in the sky. But the other part is understanding that the sacrifice that you're making in homeschooling, that's part of it. You've already used to making sacrifices. So it should be easy to work with homeschooler mentality, because they're willing to make the sacrifices. Not huge, not anything that's going to keep them, make you eat bologna sandwiches. We're not talking about
Rice and beans, like Dave Ramsey
right,
says.
right.
Rice and
Rice and
beans.
beans, right? We're not, taking it to that level, but we allow through the information we share to make up your own decisions.
Mhm. Yep. It's interesting. My husband and I were just talking about the other day when we went to make our Roth IRA contributions for the last tax year.
Yes.
We said, "Oh, it's going up for this coming year." They
Mhm.
bumped it up another $500, and he said, "Yeah, they bumped it up a couple times recently, but
Mhm.
neither of us knew why." So that
Mhm.
makes a lot of sense. Thank you.
Oh
Mhm.
yes.
Mhm.
Oh yes. The message is very strong.
Mhm.
The government don't give us anything unless it's to their advantage, and that is to get us off their rolls.
Mhm.
That's right. That's right. Well, and the 529 contributions, those are important too. And
Yes.
Mhm.
when our kids were born, we thought, okay, it's time to, even if it's just a few dollars a month, like we're gonna
Mhm.
put something in there regularly, right?
That's right.
Mhm.
That's
And
right.
and it grows over time. And every
Mhm.
time we do our taxes and I look at those balances, I think, okay, like it's looking like there's gonna be something for them when they're ready for it. And that's
Yeah.
Yes,
helpful.
something.
Mhm.
That's right. And that all boils down to part of what we teach,
Mhm.
the power of compounding interest. The
That's right.
magic of compounding interest is amazing. Albert Einstein, literally, it's a mathematical formula,
The
uses.
the rule of 72.
Albert Einstein came up with this mathematical formula,
Simple formula
simple formula, right?
that I
That
didn't know about,
that you
even though I have an MBA.
wow.
Yeah.
Yeah, I forgot about that part. But most people with MBAs that I run across have never heard of it either. But seriously, with this information, what I had never heard of it either. As a matter of fact, I thought it should have been taught by the seventh grade once I did hear about it. But what Albert Einstein found out is that if you take the number 72 divided by the interest rate that you're earning on your money, it will tell you how long it takes for your money to double. So if you're getting a 3% rate of return on your money, let's say in a CD at a bank, and you invest it, you take the number uh, th- 3 divided into 72, that equals 24. So that means every 24 years, that $1,000 is going to grow to 2,000 the first 24 years, and in
Mhm.
24 more years, a total of 48 years, you're going to have $4,000.
Angela, who got that kind of time?
That's right. That sounds kind of slow, honestly. Like,
Yes, it does.
But what if we can get a 12% rate of return?
Mhm.
At a 12% rate of return, divide 12 into 72. Now that's six. So now your money's doubling every 6 years. That's the magic of money making money, because as you see here, in 48 years, instead of 4,000, that same $1,000 original investment is now worth $256,000.
mm,
That's why I believe that the rule of 72 should be taught by the seventh grade, by
Mhm.
middle school.
Mhm.
But there's reasons why it's not taught by the seventh grade, and it's because of certain ideologies which do exist, whether people believe it or not, don't want folks to know this rule
Mhm.
because they're using it for themselves. Let me give you for instance. Now, that you the same person goes invest their money at 3% in the bank. Does the bank keep their money in a vault and say, well, we're going to wait till you come back and pick it up and send you on your way? Of course not. What a bank does is lend your money out to car loans, credit cards,
Mhm.
home loans, home equity loans. Last I checked with a credit card, if you've got one in your possession and you're using it, it's probably around 20% if you're lucky,
Oh, 29
or
now.
29. That's scary. That's even more scary, right?
Yeah.
But that's the rule of 72 being used in reverse against you.
Mhm.
that's right.
So what we're teaching middle American families and homeschooling families: make your money work for you
Mhm.
as hard as you work for it, through a simple example to give you motivation to make the sacrifices that you need to make.
Mhm. Mhm.
Back over to
And
you.
we can quickly show you the simplicity of
Mm-hmm.
compounding interest.
Mm-hmm. So, say for instance, someone wants to max out their Roth IRA,
Mhm.
and they want to max it out with 8,500, 86, excuse me, 8,600 a year.
Mhm.
Mm-hmm. So 8,600 a year, and they want to contribute 8,600 a year. Mm-hmm.
Every year.
Every year,
Mhm.
annually. Mm-hmm.
Mhm.
And they're
How
going
many
to,
years you think?
let's just say 20 years.
Okay.
So they contribute of their own money,
Mhm.
$180,600.
And Angela, you talked about you and your husband contributing to your Roth.
Mm-hmm.
So normal individual family contributing similar to you, contributing $8,600 a year, and every year for the next 20 years. So in total, you'd contribute $180,600.
Mm-hmm.
Hmm.
That's right. Now, estimated annual rate of return at 3%.
Okay, so let's
What would
try
they have?
3% as you mentioned, which is
Mm-hmm.
what the banks are giving.
Yep,
Mm-hmm.
that's right. For folks who do not know that they can do better.
Mm-hmm.
So that's $253,000,
Mm-hmm.
$253,550, Angela,
Mm-hmm.
that a individual would have after 20 years. But what
Mm-hmm.
if we can get
And they would
eight?
have, I'm sorry,
No,
not to cut you
no,
off.
please go
So
ahead.
that would be the total deposit, Angela, of the
Yep.
180,000 plus the interest you would have earned on the 3%. And remember the rule of 72 and how long it takes for your money to double with just 3%.
Mhm.
Mm-hmm.
Yep. So let's say you get a better return at 8%. Go up to 8.
Okay, 8%.
Now you're looking at $465,000.
Mm-hmm.
So you would think that, okay, it doubled. That's pretty good.
Mm-hmm.
But what if we can get 12%? You're talking 776, almost three quarters of more than three quarters of a
Mm-hmm.
million dollars.
Mm-hmm.
That's money
Mm.
making money.
So how do you get 12% then? Woo!
Well, we can't go into that unless we meet with you individually.
Yeah.
Okay. Well
Compliance
then
purposes.
all my friends are going to be calling you for appointments, aren't they? That's good.
But this is the deal. But this is the deal.
Mm-hmm.
Um, there we would not be able compliance wise to even mention 12% if it wasn't out there. So yes, it is out there. It is a reality, but at the same time, we compliance purposes, we would need to meet individually because we would have to hand out the information as proof.
Right. And not to mention, we also, when we meet with clients, it's not a one size fits all. And
Right.
Mel talked about, the holistic approach and the financial life cycle. So, but that starts the conversation in terms of being able to see exactly where you are, what your goals are, where you would like to be, your time horizon, exactly how much time you have, and your risk profile, and so forth. So,
Mhm.
just having an opportunity. But at the end of the day, we do provide this. This is not
Mm-hmm.
something that we charge
Mm-hmm.
for. Again, this is a service that we provide to
Mm-hmm.
clients because it is real. We
Mm-hmm.
do meet with clients that are eager and they just want to know the information. And this is where the education comes in, Angela, in
Yeah.
terms of being able to show them the clarity and exactly what it takes if they are committed and intentional about the end game.
Mm-hmm. And we're not just, Angela, speaking about um, servicing clients. We're also speaking about the fact that we can train others on a part-time basis how to do exactly what we just did, because this is a tool that we have, which is non-invasive, is
Mhm,
thoroughly education through a holistic approach to finances,
mhm,
and they can earn additional, say, $1,000 to $5,000 a month part-time
mhm.
for 8 to 10 hours a month. I'm not saying go bragging groceries at Kroger or pushing carts in Kroger. And I'm not
Mhm.
saying there's anything wrong with that.
Yeah.
That's ambitious people. But I'm saying a profession that they could actually help secure their family's finances.
Doing exactly what we just did.
Mm-hmm.
Because Angela, I'm still part time. I work full time as an auditor for a hospital in Connecticut. So the fact that this is something I truly believe in, because I myself had student loans. Had I known about this, and truly had I listened to my mother, but had I known about this, I would not have had the amount of student loans that I have with the enormous interest rate. But again, I didn't learn this in the seventh grade. So this for me is a passion
Yeah.
because I want to be able to help people not go through some of the pitfalls that I've been through, that
Mm-hmm.
you've been through.
So, how do you help families to better understand their individual situations?
Great question. We use something that's a tool that we have called Money Track.
Mhm,
As Jennifer just mentioned, one shoe doesn't fit all.
mhm,
But with this Money Track, and that's part of the program we just shared with the
mhm,
compounding of interest, we're able to gather information once we give an educational presentations. Basically, we call it our 4-pager, and it just brings to light, the 4-pager brings to light what a family needs to
mhm,
do in order for them to move forward.
mhm,
Then once we do that, then we use our tool called Money Track, which gathers that information
mhm,
and enables them to have a plan. Because the bottom line is this: most people don't plan to fail; they fail to plan. They just don't have a plan in place. And we give them that plan, and that plan is complimentary. It
mhm,
does not cost
mhm,
like the so-called big financial companies that want to charge you a $250 sitting fee so
mhm,
that they can gather that information. That's discouraging, especially the families that are already making sacrifices.
mhm,
So we're able to give this plan where now they can check the box. They can see if they have enough protection for their family. They could see, check that box. They can see if they're on a plan to getting out of debt by
mhm,
either taking the highest interest debt, paying it off first, and then paying the next debt, taking that money, rolling into the next.
mhm,
Could be sort of what we call a snowball effect that gets them out of debt. And then keeping them out of debt is more important,
mhm,
and right. And then at the same time, having their savings through their expense accounts growing because now they're monitoring their expenses. All
mhm,
this is in our Money Track. And again, it's not something that has to happen in one night or one week. It's a
it's a
process. And they
process.
can keep up with that process
Mhm.
through this game plan called Money Track.
And again, this is where the relationship building comes in
Yes,
because as they
very well
are
said.
as they are
Relationship.
going through this process, we're walking it with them one on one. We meet with them, however many times
Annual
they want to meet.
annual
Yeah.
reviews, or
Hmm.
as Jennifer just said, as many times as they
Hmm.
want, or as many times as we need, or we come together and see
Hmm.
that they need to make sure that we're, because things change. They may have another child,
Hmm.
right? Well, we need to get together. right? That's a reason to get together. They may want to buy, or, upgrade their home. Well, we need to get together. There's another reason, and all this is documented, and it's all kept in a nice financial package.
So, what does it look like for a family to work with you then?
This is where the conversation comes in. We either meet them at their home or a neutral location, Starbucks, Panera, or even they come to our office and we start the conversation. What are your needs? What are you looking to accomplish? You know, and as Emil mentioned, everything doesn't happen in the first visit because, again, we are trying to build that trust. We want you to be able to see um, 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 our heart. We want you
Mm-hmm.
to be able to see
Mm-hmm.
exactly where we stand in
Mm-hmm.
terms of us wanting to be able to walk this walk with you.
Mm-hmm.
So, and in comparison to, you mentioned other firms, there are other firms that just won't meet with clients unless
Mm-mm.
there are
Assets of 500,000 and plus.
right,
You know,
right.
they're
So,
just not
yeah.
trying to. They're not trying to bring it down to a holistic approach. They can care less.
Mhm.
They're all asset based.
Yeah.
We're about relationship
Hmm.
based, as Jennifer just said.
Hmm. It's a conversation. The same way we're having a conversation now is the exact same thing.
Sure. And so, I'm going to go off script for a moment because I have a curiosity
Mhm.
question.
Mhm.
So, if you're giving away the services,
Mhm.
how do you guys get paid? I don't understand how
That's
that business model.
wonderful. I love that question. I love it. So the way that we get paid is we work for our clients instead of working for a company. In other words, we're non-proprietary. We don't work for a specific company. What we have is a list of 7 to 10 different life insurance companies that work for us.
Mhm.
So when we sit with the client and we go over their needs, and then we take that package with the money track, and then we take it and have these companies compete for it. These companies then pay us to service you so that we can service the client. It's a beautiful concept that Capital Choice has, where I have wholesalers come in the office all the time, and they want to give away golf balls, lunches, breakfasts. They just want to give away the world to get to our client base. Well, we love that because we'll accept their golf balls, but we'll also accept the next company's golf balls because we want to make sure that we're using the best company. There are some companies that they focus on clients' credit scores. If you have a great credit score, we'll give your clients a better deal. Then great, and we'll take that client to them. If we have clients that are Spanish speaking, and there are companies who cater to the Spanish market, so it's a beautiful relationship
Mhm.
whereby we're always able to work for our clients instead of working for the company. You want to add to
And
that?
that was especially important for our CEO, Dick Kennard. Every company, every partner that we work with, whether it be from the life insurance side, the investment side, the annuity side, they're all extremely vetted to make sure that their values align with ours.
Mm-hmm.
Mhm.
Mhm. Yeah, it's like matchmaking for finances.
Yes,
Exactly.
that's right. Well said. Well
Exactly.
said.
Exactly. And
That's
even when
good.
Mel talked about our partners coming to the office and or he was joking when he mentioned the golf balls and the like, but they love working with us because they know that at the end of the day, we always do what's right by the client. It's always about the client. It's never about what we think is best for us, and
No.
then it's always about the client, and that's why we've been so successful. It's going on 30 years
Yeah,
now.
Capital Choice has been in business since
Hmm.
1996. We celebrate our 30th year in business as a marketing company,
Hmm.
which again, the key word is marketing, marketing company in August.
Hmm.
So here to stay and here to grow.
Hmm. And we're constantly expanding, as Amel mentioned,
Mm-hmm.
looking for part-time
Looking for
people
part-time
that are
people.
looking for part-time flexible opportunities.
Mm-hmm.
Hmm.
Can you tell us more about that? What does that look like?
Absolutely. As I stated, I started as a part timer.
I'm
And
still part-time.
as a part timer, it takes the pressure away from learning a new business. There's a lot of people that want to go into business for themselves, but the key is you want to go in business for yourself, but not by yourself. You want a mentor, a person that has a financial interest in you, who wants to see you grow. That's the beauty of marketing, from the standpoint of capital choice. So a part timer doesn't have to quit their full time job, or does not have to quit homeschooling, can work from home. Literally, you don't have to come into the office every day. You don't have to come into the office at all. The bottom line is, if you got a laptop computer and you're willing to plug into some training, okay, from time to time, because there is training that's involved, then you really giving yourself a chance to be successful. I'm going to be fully transparent. Yes, there's work involved. This is not a get rich quick scheme, and I preach that. It's like any other business, and if you can see yourself working from home, as a full time homeschooler, but seeing clients on the side, and helping clients get their finances together, then this is definitely a great opportunity, because you control your own hours, you can control your money, and you can control the time that you're spending with your family, most importantly.
As someone who's working full time, I see clients in the evenings and on weekends.
Mm-hmm.
So for me, I try to be as flexible, and our clients are working. So I try to be as flexible to the client's schedule as I can. So on the days that the client needs to schedule a morning meeting, and I'm not able to attend because I'm working, so then ML will take the meeting. He
Mm-hmm.
will meet with the client.
Mm-hmm.
That's the beauty of being in business for yourself, but not by yourself,
Mm-hmm.
because you're part of a team. You guys have a joint mission, and
Mm-hmm.
um, I forgot what I was going to say.
Well, I mean, I just know that with the control of your time,
Mhm.
that you're able to be able to go in business, like Jennifer said, on your own, at your own terms. You control the narrative, and I like this. And I don't want to get too serious or too melancholy, but the bottom line is, homeschoolers are already making sacrifices.
Mhm.
What if you can get yourself a goal through our opportunity, controlling your own time and your income, and you decide that, you know what, I want to take the kids to Disney in the summertime, a nice Disney trip. What do I need to save up for that? I need $8,000. Okay. Well, then $8,000 means, how many clients do you need to see through
Mhm.
helping them through our money track to put that money aside? Boom, there's Disney. You're already making a sacrifice. You don't have to make a sacrifice with memories, and create some memories as you go to.
Mhm. Oh, and one other thing I wanted to mention is, Emil mentioned this is not a get rich quick scheme.
No, it's not.
This industry is extremely regulated,
Yeah,
so
it
you
is.
have to be licensed
Yeah.
to be
Sure.
for every
Hmm. Level
tools.
of.
Because I tell people we have tools. We provide education, and we use tools within our tool belt to be able to help families. So whether it be life insurance,
Hmm.
investments, and the like.
Hmm.
So you do have to be licensed.
Right. Good. Yeah, that does, I think that gives peace of mind to
Hmm.
just know that, cuz people don't want to share their financial information with somebody that
Mm-mm.
might use it against them in some way. And
Hmm.
so, yeah,
Exactly.
I get
Yeah,
But
that.
and
it's
that's where the
the
trust comes in
clients.
as well.
Hmm.
So as
Right.
long, because ML mentioned, we don't, typically when we meet with client, it's a process, so it takes time. So we may not even be able to look at a client's financials until the fifth visit. Because again, I want you to know where my heart is. I want you to know exactly where I sit in helping you, in serving you, so that we can collectively help you accomplish your goals.
Sure. Yeah. Yeah. So tell us a win. Do you have a story of somebody whose life has changed because they worked with you guys?
Ooh, which
Where
one
where
can
do
you
we
pick?
start? Where do we start? Oh
um,
my goodness, absolutely. Yeah, we have. Uh, I have a story that, but what I have found is this, Angela, that life is about memories, and if you're educated properly with your finances and they work well for you, um, then you can create some great memories. For instance, I have a client who was a high net worth client. He became a high net worth client of mine, and um, we had got to the point where we have saved for over 8 years. He had retired. He did a rollover with me. He had retired, and he was just very stringent with his money. He just was constantly counting his money. And one day he came in with his wife, and she kind of had her arms folded. She wasn't really open. And I asked her, I says, "Is everything okay?" She goes, "No, because we don't spend any money." And
Mhm.
I was like, "Okay, well, why is that?" Because he doesn't want to spend any money. He's a tightwad. And I was like, "Oh my God, you got all this money over here. It's what's going on, right?" So he came back in appointment after that by himself, and I said to him, "So, um, what's going on?" And I'm not going to use his real name because, yeah, but what's going on? You tell me what's going on. He said, "Well, listen, man, this is the deal. She wants new carpet in the house. The carpet isn't that bad. It's a little worn, but it's not that bad. It's not a big deal." He says, "I save money and I want to make sure." I says, "Let me share something with you, because this is where the relationships come in. When you're dead and gone, they're going to spend all your money. They're going to sell your house. They're going to sell your motorcycle. And trust me, that is what they're going to do. But if you built some memories with some of this money, that will be remembered forever. Those grandkids will be remembered, Paw forever." So I said to him, "Why don't you?" What we looked at his with the money track, I was able to look at it, look at the expenses. I says, "We can pull out this amount of money," and he looked up a Disney cruise trip, and he was able to pay for it comfortably, a Disney cruise trip. And from there, he took his grandchildren on a Disney cruise trip. It was a cruise, Disney cruise trip, and they had a ball. I mean, literally a ball. When he and the missus came back in after they got back from that cruise, they had pictures, they had videos, they had the whole 9 yards. And it was like, "Oh my God, y'all had a great time." He says, "Absolutely, we had a great time. And now me and the missus, we're going to go do this. And I'm giving her an allowance every month and she can go do that and just create memories with her girlfriends." Well, a couple years after that, he passed away. But he left his family with memory. We went to Jennifer went to the memorial with me, and his grandchildren met me, and they knew me. They knew me because what we did was build relationships through talking to their pawpaw about creating memories through the hard sacrifice and monies that you have saved. You can't take it with you. I mean, there's not going to be anything attached to the hearse as you go down, the road with your motorcycles and your money. That's staying here. So create memories. So that's part of what we do. Now, can that happen for a person who comes on part time and goes out and sells, let's say, a life insurance policy that they replace a whole life policy that was a very minimum amount, but yet they came in and gave them quadruple amount, and they walk into the memorial service and say, "Thank God you came along, because my family would be devastated. The widow would be devastated. The kids, homeschooling would end. Mom would have to get a job, or dad would have to get a job, maybe two jobs, right? Take away from the family. Of course, we can make a difference in our business that will live for lifetimes, not just one lifetime, but lifetimes." So yeah, I can go into other stories too. I mean, we have so many.
Yeah, because one of the things that Emil talks about is you use the example of ashes. Because you remember you said to me, why does every generation have to start over?
Yeah, yeah,
Why does every generation? That's because they don't have that education. That's because they don't have that clarity
yes,
in terms of how to be
yes,
financially solvent. Some
yes.
people are afraid to work with advisors, again, because of the trust issue. So
Right.
yeah, that's what one of. Can you tell how passionate we are about what we
Well,
Yeah.
do?
Well, and it makes so much sense because, if every year we call the gas company and we negotiate a better gas rate, right? You guys are just doing that for your customers,
Hmm.
because their situations, and
exactly.
it makes a lot of sense to have kind of somebody who knows both sides of the equation, that's
Hmm.
not emotionally involved in the situation. They,
Exactly.
Hmm.
they can say, "Oh, well, you've got an amazing credit score, and I happen to know that this company over here is going to give you the best return." And so
Hmm.
it just makes sense because not everybody is going to have all of those pieces of information like you do.
Exactly.
We give peace of mind.
Yeah, and
We
work in concert with the client. Work in concert, and like you said, peace of mind. Give them peace of mind that there's somebody on their side. Yeah,
Yeah.
Capital Choice has, we're a bunch of independent businessmen and women, 1099, but we're all on the same boat. That's amazing because of the philosophy that we believe in instead of the products that we believe. Because the products change, products come and go, but
Sure.
but the philosophy stays intact and the philosophy is solid in the foundation, then the products won't come and go. The philosophy stays in place so that the products serve the philosophy instead of the client serving the products. Because let's face it, and I'm not knocking companies, but companies are in business to make a profit, and they're looking for profits to be made off of individuals who don't know as much.
The other example I was thinking of is the one that our teammate shared with us, whereby they had a life insurance policy that had a living benefit.
Oh yeah, yeah.
Yeah. And the mother, she was told she had
terminal illness,
terminal breast cancer.
Yep.
Yeah. So through the life insurance policy that we offer,
which is living benefits,
with the living benefit, she was able to extract a certain percentage of that policy to be able to travel with her daughter and create memories before she passed.
Her bucket list.
Her bucket list before she passed away.
That's another example. Yeah, it's a good
so
one.
We have quite a few.
Yeah, it's a good one. And then we have those that live. When you talk about dying, we have those that live, and to be invited to a high school graduation where some of our clients invite us to the graduation or the barbecue. And I've been invited to several of them in my career, where you walk into the celebration and you're introduced as the person who's responsible for being part of that 529 that now Johnny Jr. or Lisa Jr. is now going to college. We just got off the phone prior to our meeting here, where we had a client, like as we stated earlier, who was dipping into her 529 because she's now out of undergrad, get ready to go
for the cardiothoracic surgeon.
Yes. I can't even say it.
That'll be an expensive degree, but you know what? You can afford it now because people have been saving.
That's right. Exactly.
That's great. Yes. Great. Oh, this is good. So how could families get started? What would their first step be?
First step would be to contact us, whether it be, so for example, through the fair, the expo, the homeschool expo. We met quite a few clients who gave us their contact information. We contacted them, and one came into two families came into the office. We started the conversation, same type of conversation we're having with you now. And throughout the process of us, determining what their goals were and how we could be of service to them,
building relationships.
We were able to help a client, specifically one that came to your expo.
Yep,
that's wonderful. Good. So and you're going to be at our upcoming one as well, right?
Yes, we're definitely going to be at the one on May 2nd. But yeah, they can contact us. They can meet us at the enrichment fair, which is on May 2nd. Or they can contact us. So they can contact me, Jennifer, at 678-629-7493, or they can contact ML
at 678-480-1185, or email us at mlwilliamsjr@capitalchoiceinvest.com.
Or Jennifer Toussaint, TOUSSAINT. You may be better off emailing ML since it's so much easier.
Right. Or we'll just call you.
Or you could just call me. Or if you want to email me, so Jennifer Toussaint at capitalchoiceinvest.com. And if you want to check out our website, it's capitalchoice.com. Or if you want to find out some information about the opportunity, it's capitalchoiceopportunity.com.
That's great. Thank you so much. This has been really fun. And I think it's going to be really, really important for families to know that, getting out of debt isn't the only thing. There's so much more about just about being financially secure in the
Mm-hmm.
future that
Mm-hmm.
we can do today to help with that. And so I hope and pray that many families are able to be really confident with their finances because
Yes.
Yeah.
they met you now. So
Yeah.
Oh, well, thank you.
Thank you. And thank you as well, Angela. What you do for the community, that's another way of you also serving.
Great ministry.
Yeah.
It's a
Great
great ministry.
ministry.
it
Hmm.
is. I too am a matchmaker. I'm just matching families with their educational options. And so I love that you're doing that for families on a financial scale too.
Thank
Thank
you.
you.
Thank
Thanks for
you.
having us.
Mhm.
Thank you.